Good morning, Steve Reed with the morning grain comments. Markets are quietly mixed overnight with beans down a penny, corn down a penny, and wheat up 2 cents. Outside markets, stocks are kind of fluctuating about from unchanged from yesterday, while the dollar continues to trade lower and crude is lower and gold is also lower. Coffee, cocoa, sugar is also trading lower, with cattle also trading lower. So I think as we wind down in 2023, the thing that people will be talking about is the extreme weather, the two wars, and some of the economic pivots that could occur in 2024 and the impact it may have on the dollar and already the impact it's had on the stock market. And I don't know if grains will see a rally despite the lower dollar, because the weather forecast globally in 2024 looks to be close to normal. Certainly we're starting out with dry pockets in Brazil, dry pockets in the U.S. Midwest, dry in Southwest Europe and Northwest Africa, and some dry pockets in parts of Southeast Asia. But for the most part, 2023 had good crops in Russia, good crops in China. Now for 24, better crops in Argentina. Australia had a lower crop. But in general, those Russia, China, and Europe weather conditions is keeping U.S. export demand declining. And so the question in 2024 is, what will farmers plant? Maybe more beans than less corn, maybe a little less wheat. And then what does it all mean as far as some of these vessels not going through normal logistic travel routes and going much bigger routes, and what all this means globally, with some countries still in a recession, while U.S. May avoid a recession and see interest rates starting to decline. Not much news as far as overnight. The 7-day outlook for Brazil starting this weekend is 1 to 3 inch rains across the heart of the Brazil growing areas. We are seeing that the board crush margins continue to slide lower, led by the deferred, partly because of the big Argentina crop cutting into the U.S. meal demand. All three countries, U.S., Brazil, Argentina, could see increase in crush, which could offer quite a bit of resistance to the protein market. China also came out and said that their meal demand domestically is down, and that could reduce their import demand. These one stocks coming up: corn 12 billion bushels versus 10.8 last year, beans 3124 versus 3182, and wheat 1411 versus 1312. We did see where China approved 26 seed companies to start using GMO, which accounts for about 1.5% of their corn acres. Deliveries are expected to be light in the meal and could be heavy in the oil with some soybean delivery. So we'll see what happens as 23 ends and 24 starts.